slow down is the last thing that supporters of the Republicans' proposed tax overhaul want to hear. My donors are basically saying get it done or don't ever call me again, Chris Collins, a representative from New York, said last week. But the rush to get it done, particularly on the business side, where the most sweeping changes are planned, is alarming tax specialists who warn that new and unforeseen complexity, loopholes and glitches could come back to haunt tax collectors and taxpayers. All of this is happening in an incredible rush, and frankly it's absurd and incredibly poor governing to push a bill of this significance in the time frame they are doing, said Stephen E. Shea, a senior lecturer at Harvard Law School who worked in the Treasury Department during the Reagan and Obama administrations. With the accountants, lawyers and lobbyists still poring over the varying versions of the bills released by the House of Representatives and the Senate, some of the loopholes and tax dodges spotted so far, whether unintended or not, include these. A tax designed to prevent giant multinationals from shifting profits offshore also creates new opportunities for small and medium-sized firms to use tax havens to slice their tax rate in half. A provision aimed at helping small business could turn into a windfall for wealthy investors who use it to lower their tax rate on rental and interest income. An incentive to invest in slipshod, money-losing ventures would be created by the combination of a new proposal to immediately expense investments with the Senate's suggested delay in the corporate tax cut. Rules designed to prevent highly paid doctors, lawyers and other service providers from cashing in on new benefits aimed at small businesses can be easily circumvented. Even those who applaud the aim of reducing the corporate tax rate and transforming the way global profits are taxed worry that specific provisions will miss the mark. Republican leaders, responding to political pressure to move quickly, defend the process, saying Congress has held dozens of hearings on tax reform in recent years. Tax bills, by nature complex, are shaped by a galaxy of competing pressures, and withholding details until the final vote as a way of shielding the legislation from special interests is not a new strategy. Yet several veterans of previous tax battles argue what is different this time is the mix of breakneck speed and enormous scope. Consider the planned shift from a worldwide system, where profits are taxed no matter where they are earned, to a territorial system, which exempts profits earned outside the United States, bringing the American tax system in line with those in most other nations. Because the switch could end up encouraging American companies to move even more profits offshore to avoid paying any domestic income tax, both the House and Senate versions of the bill impose rules to deter most multinationals with annual revenues of more than $100 million from exploiting such tactics. But the effort to catch the giants under the new territorial system sets a financial bar that small and medium-sized businesses can limbo under.